When we were first elected a little over 4 years ago, we were up front with what we stood for and what we believed needed to be done for the Victorian economy. And we set about honouring our commitments and building for the future. We embarked on the most ambitious and, might I say, unprecedented infrastructure program in the history of Victoria. We invested billions in intergenerational infrastructure programs and completely sought to transform the way we travel, we work and we live. We built the education state, we saved TAFE and ensured young Victorians are armed with the right skills for a transitioning economy. We stood up for what is fair, what is decent and what is right. Less than half a decade later, Victoria is a much more prosperous state and unequivocally a fairer one. This budget continues to deliver on our positive plan while maintaining our strong and steady economic approach. We're delivering the suburban transport blitz, which from the roundabout at the end of your street to our state's biggest transport projects will get you where you need to go, and it'll give you options about how you get there. We're building and improving even more of our hospitals, putting solar on our homes and delivering on our commitment to open 100 new schools right across the state by, in this budget, building 17 new schools and upgrading another 109. And because we know that the most precious gift we can give a child is the best start in life, we're kick-starting the rollout of 3-year-old kinder for every Victorian child. These are the things that we said we would do. We're delivering for all Victorians. I said it last year, and I'm proud to say it again this year, Victoria's economy is powering the nation. Who'd have thought how far we'd have come in 5 short years? Victoria's economy grew 3.5% in 17-18, the highest in the nation and higher than Australia's GDP growth of 2.8%. Between 2014-15 and 2017-18, Victoria contributed 31% of national economic growth, 33% of growth in public demand, 38% of national jobs growth. Now, this is substantially more than our population share, which is 26%. So imagine, if you will, exactly how profound our impact upon the national well-being has been. And in many cases, we've had to do it alone, which is a great testament, I think, to Victorians. Since we were elected, the economy of Victoria has grown by almost $55 billion, or almost 15% in real terms, which means nearly $1 in $7 that are circulating in the Victorian economy today didn't exist 4.5 years ago. Quite amazing. Economic growth has been above trend for several years, averaging 3.5% since 2013-14, the strongest of all the states and well above national economic growth of 2.6% over that period. Economic growth in 18-19 is expected to be 3%, marking 5 years of above-trend growth, the longest period since the 1990s. Victoria's economic expansion is forecast to continue in 2019-20, with solid population growth and our record infrastructure investment helping to boost both public and private investment. Stronger wages growth and low unemployment is also expected to support solid household consumption. And most importantly, of course, Victoria's economic strength means more people have jobs. Since November 2014, more than 450,000 new jobs have been created in Victoria, and over 70% of those full-time. Quite incredible. This bucks a decades-long trend towards insecure employment, and Victoria is now creating the majority of the jobs are full-time. It's the strongest employment growth in the nation. More than 1 in 8 jobs in our economy today has been created under the watch of the Andrews Labor government. Victoria's March unemployment sits at 4.6%, down from 5.2% last year, and more than 2 percentage points lower than the 6.7% unemployment rate that we inherited from the previous state government. Jobs growth has been broad-based, with 16 out of 19 industry groups expanding. The construction industry, of course, is a standout performer, but only just when you look at the growth in the health industry as well. But essentially, the growth in the construction sector has contributed now contributes almost 1 in every 10 jobs in the economy. This reflects, I think, the significant infrastructure and dwelling investment currently underway right across the state. It's also flowing through to the new jobs in health, hospitality and many other industries. So the diversity of our economy is one of the great strengths and will ensure that we continue to grow. In our first term, the government delivered operating surpluses each and every year, averaging $2.2 billion a year. And I might say there hasn't been a Labor administration in this state since the turn of the millennia that hasn't delivered surplus budgets. But you can go back to 2012-13 and find a deficit budget delivered by a Conservative government. But then they lecture us about not knowing how to manage money. So we're continuing with our strong economic record. We promised to maintain a strong economy and strong surpluses. And with this budget, that's exactly what we've delivered. Despite a stamp duty write-down of $5.2 billion, our average expenditure growth over the next 4 years remains lower than the average revenue growth. Now, for us, that's one of the key requirements, making sure that we stick to our fiscal parameters as I described them. They're our rules of operating. Make sure that you run healthy surpluses. Make sure that we don't spend more than we earn over the economic cycle, and also ensure that we keep debt for core government infrastructure below the level we inherited. But of course, for intergenerational infrastructure, it's a much different story and different operating rules. The operating result for the general government sector in 2019-20 is forecast to be a surplus of $1 billion. Operating surpluses will then average a healthy $3.4 billion over the following 3 years. That provides the strong foundation for the government to deliver our positive plan for the people of Victoria. We're also seeing the benefits of Victoria's strong economy right across the state. Most of Victoria's regions have benefited from strong employment growth and declining unemployment. Since we were elected, more than 66,000 jobs have been created in regional Victoria. In the 3 months to March 2019, regional Victoria's unemployment rate was 4.6%. That was the lowest recorded in the nation, and now 2 percentage points since we came to government. And the new April data released last week shows that regional unemployment in Victoria fell to an all-time low of 4.2%. So our economic position is strong, and it's not by accident. It's because we've created the right conditions for business to invest, create jobs and to expand, all the while getting on with building the infrastructure our growing state needs. Government infrastructure investment is expected to average $13.4 billion over the next 4 years. That's nearly triple the average of $4.9 billion a year from 2005-2006 to 2014-15. Our investment is making a real difference, delivering new schools, better hospitals and more reliable road and rail for Victorians. And we have been, in the past 4 years, as we've been doing in the last 4 years, this investment is creating jobs. With a focus on building local and hiring local, the government's infrastructure agenda has ensured that 115,000 jobs are being created for Victorians. As we made clear at the election last year, net debt will be stabilised at 12% of gross state product, the size of the Victorian economy, over the medium term, to fund 3 major productivity-enhancing projects: North East Link, Melbourne Airport Rail and the removal of another 25 dangerous level crossings by 2025, making the number 75 in total. Now, these projects will be fully funded as a consequence of this initiative, noting that the Commonwealth has committed to contribute $5 billion to the Melbourne Airport Rail. With our debt levels and the cost of borrowing comparatively low, it's a good time to invest in these projects and our state needs them, and they need them delivered as quickly as possible. Victoria remains amazingly one of only 10 sub-sovereign jurisdictions on the planet that has a AAA rated economy from both Standard & Poor's and Moody's. And that's a testament to our strong financial credentials. But I'm also very pleased to say that late yesterday afternoon we received advice from Moody's that on the back of our budgetary settings that they had once again confirmed that the Victorian budget warranted and deserved a continuing AAA credit rating. So the discipline continues, but of course we've found new, creative and, might I say, necessary ways to resource the growth in the Victorian economy by investing in the infrastructure that the community needs. Over the last 4 years, we've been rebuilding our suburban road and rail, removing level crossings and fixing hundreds of kilometres of suburban streets. In just 4 years, the Andrews Labor government has invested $46.7 billion undertaking an unprecedented overhaul of our state's transport network. But as our suburbs grow, we know that this pace must become our new normal. We can't simply sit back and congratulate ourselves on our achievements to date. It's why, with this year's budget, we're undertaking a massive suburban transport blitz to radically reshape our suburbs, fundamentally changing the way people get around. And this includes fully funding the North East Link, removing those 25 dangerous level crossings, additional to the 50 already underway, $3.4 billion to transform the suburban train network, $608 million to upgrade the local suburban roads that drivers use every day. And our big build is not only helping people get home earlier and safer, it's driving our economy forward. Public investment has been instrumental to economic growth in recent years, positioning Victoria for sustained economic and, might I say, productivity growth as well. Public investment grew by 10.5% in 2017-18, adding half a percentage point to Victoria's economic growth. This follows similar contributions in the previous 2 years. Public investment, such as from our major infrastructure projects, also encourages private investment. Over the past 3 years, the contributions of private business investment to real economic growth has increased tenfold to 1% in percentage points in 2017-18. The combined contribution, of course, of both public and private investment has reached 1.5 percentage points in 17-18, the highest contribution of investment in over a decade. So while our infrastructure investment helps keep driving job creation, this government understands that business is critical to growing the economy. I'm going to have to ask your indulgence for a moment. I'm going to make a political point. After all, I am a politician. For the fourth budget in a row now, we're providing payroll tax relief for Victorian businesses to help these businesses continue to grow, create employment opportunities, generate wealth and help build the state. We're increasing the payroll tax threshold again to $700,000 from 22-23. We're cutting the regional payroll tax rate even further, down to 25% of the metropolitan rate by 2022-23. And we're also helping businesses to relocate and to expand into regional areas with a new 50% concession on commercial and industrial property transactions. So this will mean that we will have provided well over $1 billion worth of business tax relief, more than 4 times that which the opposition delivered in their last 4 years in government. Regional businesses were one of the big winners in our first term of government, and we're delivering for regional Victoria again in this budget. Across our state, regional businesses will save around $150 million in payroll tax next year as a result of the reforms that we've put in place. And it's not just tax cuts. This budget also invests $150 million to establish the Victorian Jobs and Investment Fund, which will support new opportunities to strengthen our economy and also to grow jobs right across the state. In its first term, the Andrews Labor government delivered more than $13 billion towards the projects and the programs that matter most to regional Victorians. This budget continues our commitment, providing $2.6 billion to support local jobs, local economies and local communities through the Delivering for Regional and Rural Victorians program, investing in the skills and services our regions need. With investments in local projects and local priorities, this program will help make sure we continue to deliver for regional Victorians and support an estimated 4,500 jobs. $804 million is being invested across our regional road network. $340 million will go towards the purchase of up to 18 velocity trains. $100 million will begin detailed planning for the Western Rail Plan, including the full separation of regional and metropolitan rail services on the Geelong and Ballarat lines. That's the only way you can deliver fast rail to the regions. You have to actually ensure that you separate the metropolitan and the regional lines. So this is the first and most important step in delivering genuine fast rail to our regions. We're also boosting the Regional Health Infrastructure Fund by $100 million and providing 500,000 regional specialist appointments to ensure that regional Victorians are getting the best care wherever they live. As we continue to invest in road and rail, education and health, skilled workers are in demand. Our big build needs apprentices. Our hospitals need nurses. Our kinders need educators. Through our historic investments in Victoria's skills sector, we're making sure that our kids are first in line for these high-quality, good, well-paying jobs. The budget continues our efforts with upgraded and redeveloped facilities across Victoria and free TAFE expanded to early childhood courses. And we're going to work with industry and training providers to develop new big build apprenticeships and Victoria Cares apprenticeships. This will ensure big build and social services sectors are underpinned by a highly skilled workforce. This budget also continues our multi-billion-dollar investment in building a world-class education system, building and upgrading over 100 schools. We're investing $5.5 billion to ensure every Victorian gets the very best care in the very best facilities. That's obviously important to people's lives, but making sure that we have a healthy workforce is also critical to business activity and success. So our commitment to our education is complemented by our continuing commitment to growing and building our health system and the professionals that underpin it. Now, before I wrap up, I'd like to thank Mark and the Victorian Chamber for being wonderful hosts, and can I also thank the Press Club for also being wonderful co-hosts, allowing this event to occur. I'd really want to finish off with just a broad observation philosophically about what has motivated this government to act and to set the priorities and the choices that we have. Our economy is strong and the strength is paying dividends right across our great state. With this year's budget, we're delivering on our positive plan that we took to the election. This is a Labor budget, make no mistake. It invests in the projects our state needs and the people we need to deliver them as we said we would. This budget is not about what limits us today, but rather the measures of our aspiration for tomorrow. With this budget, we're keeping our promises and delivering for all Victorians. I do want to make the great point at the end that Victorians cannot sit back and wait for the rest of the nation. We can't set our mark or measure our success by their performance. The late great Bob Hawke once said that the world won't wait for Australia. Well, Victoria can't wait for the rest of the nation either. We can't use excuses or complain about the outcome of a federal election. The people of Australia have decided that, and we have to get on and make the choices and decisions that give us the best opportunity to succeed in what is becoming an ever increasingly competitive world environment. But what we do need to recognise is that partnership with the Commonwealth will play a very substantial role into the future, and it's about time that we found common ground to move forward together. Thank you very much.
Thank you, Treasurer. Now, you've chosen a charity, the Treasurer's Charity, for this year. Would you like to tell us just a little bit about that?
Thanks, Mark. Yeah, it's Beyond Blue. Every year I have a charity where I make a contribution to the charity, and I basically try and squeeze as much money out of the well-heeled as I possibly can. So you're looking pretty well fed and well dressed here today. So Beyond Blue, Julia Gillard this morning came along and talked about the work that Beyond Blue is doing, particularly dealing with the enormous presentations of mental health problems in this country. She identified some 12 million contacts with Beyond Blue on all of their social forums, in their contacts with the community, identifying problems with mental health. So it tells us that this is a real and emerging and substantial problem that we as a government, as a country, have to face up to, and Beyond Blue are doing enormous work. We've, of course, announced that we've established a Royal Commission into mental health. We included $705 million to address mental health problems in last year's budget. In this year's budget, another $170 million to deal with mental health problems. And of course, we're awaiting the recommendations out of the Royal Commission, which, to give you an insight into how nervous I get, the Premier has said we will implement each and every one of those Royal Commission findings. So somewhere along the line, I suppose I'll probably have to find some money for that. But when the Premier says it, we do it. So if you could help make a contribution to the now the fifth of my budget charities, I'd greatly appreciate it.
Thank you, Tim. And I'm pleased to announce that the audience today, through a Clip the Ticket process, are donating over $4,000 to your Beyond Blue charity, and we'll give that to Beyond Blue on your behalf. So thank you, audience. Now, although the Victorian Parliament is sitting today, Tim is going to be with us for about another 25 minutes, and I'm going to call on Brendan Donoghue, the state political reporter for Channel 7, to host a Q&A with Tim. Brendan's got a few questions. We will then throw to the audience. We have some roving mics. So think of those really prickly questions you've always wanted to ask the Treasurer of Victoria, and I'm sure Tim will be up to answering them. Please welcome Brendan.
Thank you. G'day, Tim. How are you? I might get you to jump in front of that mic there. I think last year we had about 15 tables taken out by the AFL, but it's good to see some of you back here. Got the check. Fifth budget, are they like children?
Well, they're interesting in the sense that each and every one all have their attendant problems, and as I say, every budget is about choices. This budget, more than anything else, is for me probably the most difficult one to have delivered. John Brumby used to say that concluding a budget was like trying to land a helicopter on a supertanker in a typhoon because there are so many moving parts. And this one, once again, was incredibly difficult, probably the hardest to deliver, I think.
Long tradition of raiding authorities, and a lot of talk this morning in Parliament about roughly $2.8 billion taken out of the TAC, and the opposition is saying basically that is hurting the road toll. What do you say to that? Why do you have to raid the authorities at such a great amount? Because
we told the Victorian people at the last election that that's exactly what we would do. The opposition don't seem to understand what a dividend is. We're making no change to their operating performance. We brought them within appropriate economic accounting standards for managing that asset base, but quite frankly, taking this money out will allow us to put it into the Delivering for All Victorians Fund, which we said we would, and it will enable us to fund the delivery of things like our suburban roads blitz and other things. The key part to this is that This is not the intergenerational funding, the increase in the debt profile that we promised. That money is going effectively into those three big infrastructure projects. The money that we've taken out has no effect upon their statutory remit or their obligations to deliver their services, and we were advised before the last election that this would effectively ensure that we ran a lean and efficient TAC that still has to comply with its obligations to the community.
Where would the books be without the leasing of the Melbourne Port, worth about $10 billion, and also the extra borrowings of $34 billion over the forward estimates?
Well, that's over the forward estimates.
Yeah.
That's looking forward. Where would we be? We probably wouldn't have delivered the infrastructure that we've done up until now. Bearing in mind that it wasn't just the lease of the port, it was also the efforts that we put in place with regard to our commitments to sell to the Commonwealth Snowy Hydro, or indeed, of course, the concession around the Land Titles Office. Now, this is not easy stuff, and it upset a number of people in my party at the time, but ultimately you get to make choices in government, and you get to decide exactly how and what is the most important thing for you. Before the 2014 election, we said we will use the money from the concession and lease of the port, and we will use that money for the purposes of removing our dangerous and congested level crossings. And quite frankly, we did a lot better than we expected. We got close to $10 billion for that lease, and that's twice what New South Wales got for the lease of two ports for twice as long. So we struck a pretty good bargain, I think.
In hindsight, do you think delaying the state budget until after the federal election worked? And why did you pick on Ferrari driving, gold mining, Chinese property owners in terms of new taxes or increased taxes?
Well, the answer to the last question is because I could.
On that point, a lot of people said, well, you can buy a Land Cruiser, a Sahara, which is just over the $100,000, and you'll be taxed $7,000 now. Why do that?
Well,
someone who saved up maybe for 20 years to buy one of those.
Well, they've been saving up for 20 years for this. Get a life, I tell them. But look, I think the reason we've done it is we are in a position where essentially, as a government, we have seen a massive write-down in revenues. Which you
didn't pick. Your people didn't pick last year.
And might I say, Treasury, a big shout out to Treasury.
It was all over the newspapers about the property market dropping. What's going on in Treasury? Don't they read the Age, the Herald Sun, the Fin Review? They haven't got Facebook. What's going on in there?
Well, they did win a prize for the best predictive analysis of the directions of an economy across the country just recently.
They were $1.3 billion out a year.
As pretty much well was everybody. I might say that before the last election, in the pre-election budget update, we identified $2.4 billion worth of write-down. Another $2.8 billion has occurred. But we were progressively telling the Victorian people what was actually happening as those write-downs were occurring. We weren't prognosticating about what we thought was going to happen into the future. I was calling it as I saw it, and I thought telling people before the last election was a heroic call, but I think it was the right thing to do.
Why so confident the property market will rebound in the next 2 or 3 years, or I think you said yesterday, the next 12 months, which you often say the next 12 months? And what happens if it doesn't? What's plan B?
Well, plan B is do what we always do, make the decisions to ensure that we keep to our fiscal parameters, and if they're hard decisions, well, so be it. We have to make them. But I suppose what we are starting to see, there's much more volume coming back in the market of recent time, and the fall away in volume has been the thing that really hurts a budget. If you don't base your budget upon the best advice about what's happening in the market, and when 40% of the state's revenue base, own source revenue base, is property related, it hurts. So we are seeing that there is a levelling out. I'm not yet going to call it an improvement in the market, but a levelling out. We've seen a fall away of about 10% on price, and we're seeing a volumetric drop of about 15%. But we are starting to see the signs that collapse, which was the biggest collapse in the recorded history of the state on price for land. So effectively it's had a pretty dramatic effect, and nobody saw it coming, or certainly people were predicting things were happening in the market. We knew that, we were calling it as occurred, but we never saw anything of this magnitude, and we've adjusted accordingly.
The 2.5% tax on gold production already, the Ballarat gold mine, or I think it's owned by Castlemaine Gold, they're talking about putting off 160 people. What do you say to that?
Firstly, it's 2.75.
2.75,
Don't
sorry.
try to rip me off,
Correction.
Brendan. Look, I say this. First of all, Victoria is the only state in the nation that had no royalty on gold. I think it was preposterous when I came across this when I was Resources Minister towards the end of the last term of government. I couldn't believe that the state of Victoria didn't have a royalty for gold. That is, we didn't actually seek to extract some value for the asset that is ultimately the ownership of the people of Victoria. Yes, I saw that there will be a animated discussion about whether an impost on business and a royalty has an impact upon their operating model, there's no doubt. But I make this point, Navarre have been out in the public domain saying it's no big deal in terms of the royalty. And we've also seen Hugh Morgan come out and say that he considers it a sensible, and you would have expected them to do something like this. I'm not sure whether that's a character assessment of us or an endorsement of it.
The place is falling down. It probably should be bulldozed, but why no money in the budget for Gardenia Park?
Oh yeah, they're doing it tough down in Geelong at the moment, I can tell you. Just out of interest, Brendan, what's your team?
Essendon.
Essendon.
We didn't get much out of the state government
the
at
money
all.
we spend on Geelong will just detract from Gardenia Park, surely.
How much for the Whitten Oval this year?
Oh, almost nothing. It was
How
$1
much?
million for planning.
Planning what?
Planning something big in the future
Oh.
for high-quality Victorians.
So how long do you want to stick around in the job? You've obviously got another 3 years if you want it.
Well, I'm told today I am the 15th. Yep, that's new mathematics that we're
fittest,
adopting.
yeah.
I am the 15th longest-serving Treasurer of Victoria out of 50 so far. And I surpassed John Cain Senior today.
And the only one who looks like George Clooney.
Have we changed
No, we
treasurers?
haven't. We haven't. We might take a few questions from the floor. I think there's roaming mics. There's one up the back there and one over there. And there's a question over there. Is there a roaming mic for over there? Thank you. Right in the corner. Perhaps if you just say your name and where you're from, just to get it out there. Thank you.
Terrific, thank you. And again, congratulations to Becky and to the Treasurer. Thank you so much for your time. And I just wanted to congratulate you too on just such a balanced budget. Mary Ann D. Gelanato is my name, Director of Corporate Services at Maroondah City Council. And Treasurer, I'm definitely not stalking you, I promise. It's a similar question to which I raised with you earlier in the year. And great to see all of the investment in infrastructure. Really still very concerned about waste management and that whole space, not only at the state level but the federal level. If we can concentrate on state and the landfill levy and what are we going to do about the future of waste and how we handle all of our waste streams across everything. Thank you.
Well, thanks very much for that. Look, the state does recognise that we've got a very substantial problem here, and the state government sees themselves as a key component towards working towards a solution in this matter. And I think there's $34 million thereabouts in the budget that's been allocated to continue the work. Can I assure you that is not the end of the work? That is a second instalment. We've previously given money to assist councils make the transition from their old contractual regime to a new and more sustainable contractual regime, given that the China sword strategies had pretty much crewed the business model for councils. So we understand that there's a lot of change that will occur. Late last year, we put out probably the middle of last year, we put out a policy identifying where the work would go in the circular economy, essentially around recycling, reducing waste, and looking at alternatives, more efficient use of our resources. From our perspective, we believe that the solution, on top of the short-term assistance helping councils make the transition, will ultimately have to be borne out through a final and concluded policy framework, together with additional funding that will be made. We expect either by the end of this year or early next year. We can help in the interim with councils in terms of how they deal with the operating costs and the contractual negotiations. We are going to have to, this is quite a complex issue. Are we putting more money into better identification and sorting of waste? Do we need to look at waste to energy strategies? How do we use our procurement policies to ensure that we're better recycling product into our construction effort? So there's a lot of work going into this space, can I assure you. It's an area that I'm quite passionate about, but we're not going to rush into this. We're going to get it right.
Thanks, Tim. There's one down there as well, please.
I'll keep it on the table. Thanks, Treasurer. Stephen Peacetti, Chief Executive at Latrobe City. Thanks for your presentation. And I suppose thanks for the investment in Latrobe City, particularly in terms of transitioning from traditional energy sector to transitioning new jobs. But I suppose that's a challenge we're going to face ongoing into the future. And I see the RGIF program has ended, but there was I think the Victorian Jobs and Investment Fund you mentioned there. I'm just wondering what the criteria is for that and how that might be accessed by regional areas particularly.
So firstly, what we thought would be a better way of dealing with this, rather than essentially having a fund of money, would be for the state to be a lot more transparent in the budget process, to talk about, well, here are the specific allocations that we're giving. So the $2.6 billion that we've allocated in this budget to rural and regional Victoria has been a deliberate effort by the state to have a lot greater level of transparency about the money that's going in. So there is $150 million, as you rightly identified, through the Jobs and Investment Fund, and as Economic Development Minister, I have a say in it. As Treasurer, I have a very substantial say in it. But the aim here will be to see exactly what the capacity to create jobs looks like in the attraction of investment or in the tooling up of existing companies. So both the Trade and Industry Minister, the Jobs Minister, and myself will work closely together, and we'll in due course be producing the content of the fund's requirements in order to meet. But can I give you the hint? It'll be about creating jobs, jobs of the future, jobs that are sustainable into the long term. In Latrobe Valley, of course, we established the Latrobe Valley Authority, $266 million when Hazelwood closed. We did that because we wanted to prove to the people of the valley that we weren't just going to make a big investment, a big statement about needing to come up with a rescue package and then quickly move out of town. We're here for the long haul. There are going to be very substantial challenges going forward in the valley, and we accept that we have a responsibility to that community to stick around and to come up with policies that work in the long term for them.
Thanks, Tim. Just one on the right wing here.
Philippa Kelly, Large Format Retail Association. Treasurer, congratulations on a budget that goes some way towards addressing payroll tax. The large format retail sector employs more than 116,900 people, FTEs, both directly and indirectly. So my question about payroll tax is because many of the employees are located in regional areas. So is the reduced payroll tax going to apply to the place of work, or is it where their head office is?
Well, a little bit of good news. I don't know if it's going to go all the way to addressing the concerns that you've raised, but there are three fundamental changes that we're making to the way that the payroll tax regime operates. Firstly, we'll be progressively increasing the threshold to $700,000 from the $650,000 that it is at the moment. So that will create somewhere in the vicinity of 40,000 businesses that will get some benefit around the elevation of the threshold. We'll also, of course, again, reduce regional payroll tax from the 50% of the metropolitan rate down to 25% of the metropolitan rate. And there's a third change that we've made, probably hasn't got a lot of attention, but up until now we've had this strategy that if you were an employer and you had your headquarters in metropolitan, well, outside of rural and regional Victoria, then you had to demonstrate that essentially you had 15% of your workforce and no more in metropolitan Melbourne or wherever your headquarters were. What we're now saying is essentially that you'll be able to access that entitlement, provided that regardless of where your headquarters are. So they can be in Melbourne, they can be in interstate in Australia, but you still have to meet the percentage criteria that 85% of your workforce is employed in rural and regional Victoria.
Treasurer,
I think the bloke with the mic's already stood up, so...
here we go. Thanks, Brendan. Stephen Mayne, a former councillor and working with the Alliance for Gambling Reform. Quick double header. Land tax revenue is up 600 million on the year unforecast, so you've had a $600 million windfall you weren't expecting to a record 3.6 billion. How have you got that when supposedly there's a property crash? And how do you intellectually justify capping rates on all councils at 2%, choking off investment in local infrastructure, while you're making out like a bandit on land tax? And the second question is to gambling revenues. You're budgeting for 1.1 billion from the pokies licence holders in August 2022. If Gillen and the other AFL presidents decide they want to get out, or the RSL, how locked in are they to paying that 1.1 billion in licence fee payments, or can the RSL negotiate away from giving you $68 million for the rights to run poker machines for the next 10 years?
Right, there's a lot in that. I'll try and unpack that quickly. So on land tax, as you know, the Valuer General does an assessment of the value of properties, and therefore land tax is based on the assessed value of property. Land tax does not apply to the principal place of residence, your home. It only applies to investment properties. And he concludes those assessments, I think, about middle of last year. So what we're seeing is an assessment, a historical assessment, because you'd have to appreciate there's a lag between doing the assessment of those properties and when the land tax rates go in. So yes, there has been a reduction in the value of those properties. As I say, I think about a 10% of property values has come off. But it's effectively different time bases that have occurred. Can I say that because we've now moved to an annual land tax assessment, there'll be a much more responsive system than had existed in the past. It was every 2 years. So if you think about it this way, I'd be receiving the bounty of 2 years of overinflated land values. I'm not going to do that as a consequence of the legislation that we brought in. But importantly, I think the one obvious assessment about land valuation is to the extent that it is contemporaneous and it is reflective of what's happening in the market. It's an identification of people's wealth accumulation. That is the value of the homes that they're getting. So the state has had land tax, and it's there for a reason. It's about the economic use of the asset base of the land base of the state. And we expect a price for it. So I will take a hit in next year's budget as a consequence of these measures. They've been all factored in and will be, and I've wound back the projections on land tax as a consequence. Just on the issue of gaming taxes, I'm not the gaming minister, so although I do look closely at what's coming in through gaming tax, we're seeing those numbers on gaming, particularly electronic gaming machines, coming off, and the government doesn't see that necessarily as a bad thing. I say that because increasingly as a government we know that the harm that gambling does, and if there are proposals in terms of how we might assist in terms of winding back football clubs' capacity to access and use EGMs to prop up their business model, I'm happy to have a discussion with them about it. I also would make the point that the state does have a cap on EGMs that we apply throughout the state. There is a secondary market for those leases, and they can be put into the market if they're released, and they can get value for it. I'm not sure what the technical details about how you release into the market is, but we'd be prepared to look at how we might facilitate that, should that be an issue.
Thank you. One in the middle there, please.
Thanks, Minister Pallas. My name's Fiona Sweetman from Hidden Secrets Tours, a small business in Melbourne, and on the board at VTIC. I have a question about Visit Victoria. This government supported the creation of Visit Victoria, and it seems astounding that they've only been given 1 year of funding in an area where employment growth is absolutely clear and a hell of a lot of private investment in this environment is happening at the moment. So wouldn't it be great that the government could give us some sort of future in terms of understanding a forward planning program? Thanks.
Yeah, well, I suppose that would be right, and wouldn't it be great if I could be certain about what my revenue inflows would be in the state of Victoria each and every year after my budgeted year? And the truth is, as I've said to my friends in the trade union movement, I can only spend what I've got. And essentially, I think Visit Victoria's getting $30 million in the budget, and the aim is to keep their allocation profile as it was for last year. So at much effort and due to the advocacy of the Minister, Minister Pakula, we've been keen to preserve that level of activity. So no harm will be done to Visit Victoria, and it is my intention that we give some level of certainty going forward, but I'd like to see how things settle out of the property market in the near term.
Thank you. And we've got time for one last question just here on your left.
Thanks, Tim. Ken Marchingo, CEO at Haven Home Safe, which is your first registered affordable housing association. So on behalf of my colleagues here, can I thank you for the Homes for Victorian announcement? I can also thank you for the more than $1 billion that sits on our collective balance sheets and the resultant housing, not to mention the economic multiplier that comes from that. In the recent election, one of the commitments was that the state government would deliver 1,000 new public housing properties. We understand why that was, and anything to keep the Greens quiet. But we've put in front of your staff and department a proposal that says rather than 1,000 units over 3 years, we can collectively, with very little government support, and the 4,000 public housing transfers that were announced as part of the election commitment, if we were to lift that a bit, we could deliver 3,000 units a year for the next decade. Just wondering if you wouldn't mind following up where that proposal is with your department, and whether you have any. And can I just also say one thing? We're also homelessness services, and Melbourne lost one of its citizens over the weekend. And there's enormous tragedy in that. We all understand the multiple intersecting failures of why that is. But can I also say, in my 36 years of working with homeless people, we've never seen the amount of commitment to new programs in the homelessness field that we have over the last 3 years. It's a little bit underdone this year compared to what you've done previous years, but we understand why that is. I'd just like you to take our thanks back to the Premier and Cabinet for that, and hope that there's a bit more there to prevent what happened in Parkville last week happening into the future.
Thanks, Ken. A couple of things. On the public housing space, we've put about $200 million in this budget to assist with that, and that certainly we recognise that there's a lot more work to do. Homes for Victorians really put about $2.5 billion thereabouts into providing not only a social housing growth fund, but also to give a guarantee essentially to providers to the tune of about $1 billion, and hopefully that will assist in being able to grow stock and provide some economic stability to you going forward. But it did a lot of other things too, and one of the things, of course, was to make an investment in homelessness services. In this budget, we put another $50 million into homelessness services. Certainly, I don't think we've got to the point where I would say that we've finished our work in the Homes for Victorian space. The Premier is very focused on this, and I think you can expect from us what you've seen from us in an ongoing sense. A budget is not the end of the process, it's the start of the process for this government. We will continue to look at what more we can do to stimulate the housing sector, to assist in meeting our social objectives and agenda, and that means growing more public and social housing, and seeing if we can take the weight off first homeowners and purchasers in key areas. So there's a lot we can do and a lot more that we have to do. Follow up the report. I will follow up the report.
Thanks very much, Tim. Thanks for and all the questions and for your time. And I think now we're going to throw over to Adele Ferguson AM, President of the Melbourne Press Club, who will propose the vote of thanks for the Treasurer. Thank you.